Hello, hello. Welcome back to another training. My name is Danae Wolf. I am a financial clarity coach and a profit strategist, which means that I help entrepreneurs like you increase your profits and decrease your stress simply by learning how to interpret your business finances. I know that small business accounting can be extremely overwhelming. I have been in your guys' shoes before trying to interpret a profit and loss and a balance sheet and all the things. And my entire goal on my tiny corner of the internet is to really take that complex topic and break it down for you guys so that you can utilize your financial data to make strategic decisions in your business. If you are on here live, go ahead and say hi in the comments. And if you are catching on the replay, please do me a favor and just write hashtag replay. Any type of comments or engagement that you guys can give me tremendously helps me with the algorithm. I want the algorithm to show this to as many people as possible because I believe that these trainings can be really beneficial for the entrepreneurial community. I do these trainings once a week, typically every Friday at 2 p.m. Eastern Standard Time. Now, today's topic I'm super excited about. It is how to pay yourself from your business. And the reason why I'm so passionate about this topic is number one, we all started our businesses to make money. And I think that so often, just because of the way society is, it's very faux pas to talk about money. And you guys have probably heard the saying before, like, if you're in it for the money, you're in it for the wrong reasons. And honestly, that's bullshit. I don't know what went wrong in society that people started to make money a dirty word, okay? You absolutely started your business to make money. You are in this for the money. Now, your passion, okay, that came through in the decision for the type of company you started. So when people say, oh, I'm not in it for the money, I'm in this because I'm passionate, they are lying because if that was the case, they would be doing a nonprofit. But if you're in a for-profit business, you launched the company to make money. Now, the kind of company you did completely stems from your passion. And if it doesn't, I do think you're going to have problems. I think you need to be passionate about what you do. So for me, I'm really passionate about taking the complex topic of small business finance and breaking it down because in my personal journey, I needed somebody to do it for me when I opened up 2 restaurants at a young age. And there wasn't anybody doing what I do. Now there's a lot of people like me, but at the time, years ago, there wasn't anybody doing this. So I'm very passionate about doing this. But I launched my company. Don't get it twisted. I launched my company to make money. And then the next question was, okay, what am I passionate about? What do I love doing? That's how I landed on the type of business. But the reality is, unless you are running a nonprofit, you launched your company to make money. Okay. So that's really step one. The first thing I want you guys to admit to yourself. And how do we make money as entrepreneurs, right? We have to pay ourselves. We're not working at a company where a boss pays us. We are the boss and we have to pay ourselves. So today I want to talk about how to be compliant with the way that you pay yourself. So as an entrepreneur, there are a couple of different types of business entities. Now, based on what I know about my audience, what I know about you guys from speaking with you and your feedback, I know that most of you are going to be sole proprietors, LLCs, or you've elected SCorp. We're not going to have a lot of C Corps watching this. So we are going to focus on sole prop, LLC, and SCorp elections today. So if you are a sole proprietor, that means that you have not formed any type of a business entity. You haven't done your paperwork to become an LLC. You are doing business as John Doe, as yourself, as your name. If you have formed an LLC, you guys would know because you would have done the paperwork, you would have gone through that process. Like my LLC's name is Wolf Management LLC. Then the third option is if you are an LLC, you can make the decision to elect SCorp status. Now, what I want to explain in this live is based on that type of entity you are, whether we're sole proprietor, LLC, or we've elected SCorp. I want to break down the ways in which you pay yourself. So, if you are a sole proprietor, I want to explain that when it comes to paying yourself, it's going to be no different than how an LLC would pay themselves. Okay. So, as a sole prop, as an LLC, the way you pay yourself from your business is you take what is called a draw. So, this can be done by either simply connecting your business checking account and your personal checking account so that you can make a transfer right online. That is my preferred method. You just transfer the funds. Or you could literally write yourself a check, but to me, that's a little bit more work. And who even has a checkbook anymore? But I prefer the method of just transferring the funds. Now, what I want to make really clear when it comes to my sole props and my LLCs, two things you guys must keep in mind. You do not want to use your business checking account to pay for a personal expense and just say, I'll count that as my draw, right? We don't want to do that. We want to always keep everything separate. So, as an example, if you are at the nail salon, ladies, and you're getting your mani-pedi and it comes time to pay the bill, I don't want you to swipe your business debit card and say, oh, I'll just count that as an owner's draw. No, I want you to transfer the money from your business checking account to your personal checking account and then go ahead and pay with your personal debit card. Okay. You always want to keep it separate. And I think a lot of times, sole proprietors, LLCs, they simply use their business debit card or business credit card for personal expenses and then write it up as owner's pay and draw. We don't want to do that. That's not best practice. It comes into the whole piercing the corporate veil thing, and that's a lie for a different day, but just take my word for it. To remain compliant, we want a division of church and state. All right. We want to make sure that in order to pay yourself, you are either writing a check from your business checking account and depositing it into your personal, or you are making a transfer directly from the business checking account to your personal account and then categorizing that as an owner's draw. The second thing I want you guys to know about paying yourself as an LLC or sole proprietor is that you are not going to have any taxes withheld, right? Think about it. When you had a normal job, if you've ever had a normal job, you received your paycheck and it was your net pay, right? You had your gross paycheck and then your employer docked all of your taxes and gave you your net pay. Well, as a business owner, whether you're a sole prop or LLC, you are your own employer. So you have to account for those taxes. Now, this is not a live training on how taxes work, but high level, my general rule of thumb is I like to see you set aside 30% of your draw to pay for taxes. I typically like to say about 25% to the IRS, 5% to the state. Hashtag disclaimer, okay? This is a very generic rule. Everybody's tax brackets are different. And if you want to get a number specific to you, please consult with your tax preparer and they will be able to tell you how much you should set aside. But the high level point here is, let's say you pay yourself a $2,000 draw from your business this month. You want to keep in mind that that $2,000 is your gross pay, which means you will owe tax on that. So don't spend it all, don't squander it all, because you're going to eventually have to pay Uncle Sam. So those are the 2 points I want to make. When you are when you are a sole proprietor LLC, go ahead and transfer the money into your personal account or write yourself a check. Do not just, swipe that business debit card to pay for personal expenses. And then keep in mind that you are going to owe taxes on this money. And I think a lot of times LLCs, sole proprietors, we don't think about taxes. And then at the end of the year, we're sort of scrambling because we owe all of this money in taxes. Now, let's say that you are an LLC and you have elected SCorp. Now, there are all kinds of reasons why you should or shouldn't elect SCorp. And I have done a video on this in the past. I'll actually link it down below for you to watch because that's not what this live training is, but I'll go ahead and get that resource there for you guys. But if you have elected SCorp status, the way you pay yourself is a bit different. You actually are going to pay yourself in two ways. Once you are an LLC that is elected to be taxed as an SCorp, you are going to pay yourself what the IRS deems, literally verbatim, what it says is a reasonable salary. Now, the word reasonable is very open to interpretation, right? So it's sort of this strange gray area, which is why I strongly suggest if you have elected SCorp status, please work with a tax professional to just make sure that you are properly following these guidelines. But high level, the IRS wants you to pay your reasonable salary. So let's break this down. The way it works once you elect to be taxed as an SCorp is that the IRS is going to tax you as an employee of your business for the work that you do in your business. So you want to take a look at the day-to-day operations of your business and really ask yourself, okay, if I were to hire someone to do the work that I do in my business, and notice, guys, I'm specifically saying in your business, not on your business. So as an example, if you have a cleaning company, working in your business would be like days that you are actually in the field cleaning, right? So you want to say, what's market value for that? What would I have to pay someone if I'm in the field cleaning 20 hours a week, right? And then think about the administrative stuff that you're doing in the back end for your business. Maybe, running payroll, doing any type of the marketing, right? All of the administrative stuff. What would be a reasonable wage to pay someone to do the work that you're doing in your business? Okay. Now, working on your business is very different, right? If you are sitting there taking maybe some type of continuing education, maybe you're working with a coach, maybe you've joined a mastermind, maybe you're reading business books on the side, right? That's working on your business. That's us wearing our entrepreneurial hat, strategizing, high level planning. That's not working in our business, right? In our business is stuff that we're doing for the daily operations. It's very different than when we're taking that bird's eye view, high level approach of working on our business. So it's the in our business portion that the IRS is saying, pay yourself a reasonable wage, right? So you want to take a look at that and determine what it is. So let's say maybe, you should be getting paid $50,000 a year for the work that you do in your business. The second piece is an SCorp is once you pay yourself on payroll, right? Because we're taking W-2 wages as an SCorp, that reasonable salary, you're going to be able to expense that. Once all of your expenses are calculated for the month, what's left is the business's profit, right? That profit is what you are able to take as an owner's draw. When you're an LLC or a sole proprietor, the only way you pay yourself is out of profit. But when you've elected SCorp, you are able to take a business expense of your quote unquote reasonable salary, W-2 wages, and then what's left is your profit. And that is where you get to take the owner's draw. Again, the topic of this live is not about SCorp, but I will tell you that draw portion that you take is taxed lower. So what you want to do when considering what is quote unquote reasonable, you want to look at this through the lens of the IRS, right? So as an SCorp, you're going to break your compensation into two buckets. One is a reasonable wage on W-2 wages, right? Paid through my personal favorite payroll company, Gusto, or maybe use ADP, paychecks, whatever. That is the first bucket of compensation. The second bucket of compensation is the draws that you're taking from the business's profit. So you've got these two ways that you pay yourself when you are an SCorp. One of the options, that draw, is taxed at a lower rate. So how do you think the IRS is going to feel if 80% of your compensation comes from the draw, which is a lower tax rate, and 20% is W-2 wages, which is a higher tax rate? That split, right, that 80-20 split, wouldn't be deemed reasonable. So you want to think about it through that lens of, number one, the job I do in my company, is it reasonable that I would pay myself X amount of dollars to do it? And then you want to say, all right, let me look at the split. Am I doing a 50-50? 50% of my compensation comes from my draw, 50% of my compensation comes through my payroll company, or am I more like a 90-10 or an 80-20? Those are the two things you want to consider when putting together a case as to why the way in which you pay yourself is quote unquote reasonable. This is all a part of why I strongly suggest, if you are electing SCorp, you want to make sure that you are working with a tax professional. If you guys have any questions, you can also always just shoot me a DM. I'm happy to talk with you offline and help you guys troubleshoot this. I deal with it a lot, but we want to make sure that you guys understand how this works. The other key component that I really want to drive home, because one of the biggest things I see happening in the entrepreneurial community is that most of you are aware that as an SCorp, you save on taxes, okay? That seems to be fairly common knowledge, all right? But the missing piece here is that you don't realize that where you are saving on taxes is the draw. So I will see a lot of entrepreneurs say, I'm an SCorp, so I have to pay myself on payroll, and they take 100% of their compensation through their payroll company. See the problem here? Now you didn't have any money left to pay yourself on draw, and the draw is where you received the tax break. So if that is you, if you have elected SCorp and you are only paying yourself via payroll, you are really shooting yourself in the foot, because now as an SCorp, you are paying more in tax preparation fees because of the type of entity you are, and you are receiving 0% of the tax incentive to be an SCorp. And I honestly see this happen a lot. So if you have elected SCorp, please make sure that you are getting paid in two ways. Number one, through a payroll company. W-2 wages, taxes are being withheld. And number two, you are taking draws from your company, which means you're either writing yourself a check or you are making a transfer to your personal checking account. And I want you to really look at that split. Okay. I want you to see, if you make $100,000 a year, is it 50,000 on payroll and 50,000 in draws? Or is it more like 20 grand on payroll and 80 grand in draws? Really take a look at that split and just ask yourself, let's put on our common sense hat a little bit with this one. Okay. Ask yourself, is that reasonable? Could I make a case in court, not to be dramatic, but could I make a case in court? Ask yourself that this is reasonable. So if you guys have questions, which I know people usually do, because this topic can be a bit complex, I hope I really did my best to simplify it today. But if you guys have questions, please put it in the comments. I will respond to every single one. Or feel free, if you need to talk offline, shoot me a DM. You guys can find me right on Instagram at the Chic CF, at the Chic CFO. So the CHIC CFO. Now, if you guys are an LLC or a sole prop and you're also struggling with the fact that your draws are not taxed, right? And you're struggling a little bit to understand everything with estimated taxes, I do have a resource for you. If you guys head over to thechiccfo.mykajabi.com/know your numbers now. Okay. I have put the link at the bottom of the screen here. If you guys are listening on the podcast, we will go ahead and throw it in the comments as well in the episode description. But in this resource, it is a spreadsheet that helps you organize your finances. And one of the tabs is estimated quarterly taxes. It will automatically calculate everything for you and just make your life much, much easier. So again, to recap, guys, if you are a sole proprietor or an LLC, you cannot put yourself on payroll and pay yourself with W-2 wages. That's not what we want to do. Instead, we want to either write ourselves a check or make a transfer to our personal checking account. And please, please, please do not swipe your business debit card for personal expenses. We want to make sure we are never commingling funds. Then if you are an LLC who is elected SCorp, you need to be aware that you have to pay yourself in two ways. Number one is through your payroll company with W-2 wages. And number two is withdrawals. The draws are where you receive the tax benefits of being an SCorp. And you always want to make sure that the split of your compensation, what you take in draw versus what you take on payroll, is quote unquote reasonable. I hope that you guys enjoyed this live training. It is one of my favorite topics to talk about, how entrepreneurs can pay themselves, because remember, guys, you got into this entrepreneurial game to make money. It is okay to admit that. It is okay to embrace that. Money is not a dirty word. Guys, money makes the world go round. All right. And the more money you have, the more you can contribute and help out in your community.